COVID-19 has shut down the world, which in the short term is reversing some of the effects of climate change. Global consumption of greenhouse gases has dropped, the skies have cleared in China, and the canals of Venice have emptied. But what happens after this crisis is over? Currently, the companies with the most governmental support in the energy sector crisis are, as always, fossil fuels, where they are receiving more than $5 trillion in tax cuts and billions in financial support. Furthermore, protests against fossil fuel usage in Kentucky, West Virginia, and South Dakota have all been shut down by local governments, with protesters facing criminal charges, coincidentally timed with stay-at-home orders to detract attention away from this piece of legislation. In the sector of renewable energies, however, the story is much different. Starting with the obvious, projects have stalled as social distancing procedures have taken hold, radically reducing the amount of smaller renewable energy plants being produced. Where before, solar panel technicians were one of the fastest growing job markets, now almost all projects have been shut down. Furthermore, deals have been stalled within this crisis. So how, when all seems so bleak, is it possible that renewable energy could actually come out stronger than before? There are two very different forecasts for the state of renewables after the crisis. On one hand, COVID-19 has shown the fragility of old systems and supply lines, as seen with the oil price war, triggered by overproduction by Russia causing Saudi Arabia to retaliate. This dropped the price of oil so much that companies have actually begun to pay people for their unwanted oil. This situation may convince governments and financial institutions that renewables are actually more stable than greenhouse sources for fuel. For example, the EU Investment Bank has continued to pledge $1 trillion for renewable energy sectors, a move that could signal the financial strength of investing in renewables. This is a bank, so this move does not simply follow moral wants, but rather financial ones. What's more, the International Renewable Energy Agency predicts a return of up to 800% for money invested into renewable energy, which is making the future of renewables sound more like smart investment rather than a pipe dream. If you look at China, a country that has more or less gone back to normal, the situation after COVID-19 looks worrying. Where before pollution fell 40%, all of that progress can be erased by China's approval of more coal-fired coal capacity now than all of 2019 combined. This is followed by the EPA's suspension on environmental restrictions, along with $5 billion spent on pipeline construction despite lockdown. And in the case of the $2 trillion bailouts for the energy sector, renewables were never included. Some may see the situation as a crisis, but others can repurpose it, bailing out heavy fuel industries such as cruises and airlines, tying up money in these industries and thus furthering the United States' dependence on the natural gas sector. When focusing on the micro of COVID-19, it may seem that the environment is heading back to normal, but when looking forward, two very different situations present themselves, one of revival and one of absolute despotism.